We've got to go to stock picks. So Schalk, I'm going to go straight to your pick, Growthpoint.
Yeah, I'm going to be boring this week. And I'm going to be thematical. I mean, because we had the SARB, I don't want to say surprise us, but I mean, I think if we sat here a month ago and sort of discuss interest rate forecast for South Africa, we'd have most probably said we'll see the SARB wait for the Fed to react before they actually start reducing further. They did the 0.25% last week, so yeah, I think one of the sectors definitely would see, have benefit out of this is the local property sector, especially now with some of the economists coming out and say, well, this most probably won't be the last drop. So I'm just going to quickly run, again, stating the data that I mentioned to early, the Stats SA buildings that actually been completed. Now I'm talking only non-residential, your shopping centres, non-residential. When you look at that stats, and I actually looked at it over the past 25 years, and I broke it up and square meters per year, so 2000, 2021, 2020. When you look at that data, we've seen massive spikes there. Let's call it 2007, 2008. Remember that property boom. Let's exclude that. Mid 2010s to 2020s, we've been able to still complete anything between 2.5 to 3 million square meters of new non-residential properties per annum. Last year was the lowest amount of properties that can be completed. 1.5 million square meters only be completed. That's the lowest levels we've seen in more than 25 years. Where am I getting to? I mean, we're sitting with a company, Growthpoint. We know that still, let's call it 0.5%, half of them actually made up of the income in South Africa. They've got very, very low vacancies in South Africa. It's less than 8% currently. The total vacancies is 8%. And with the stock getting less and less, remember, if they're not building new non-residential properties, sooner or later people are going to have a high demand for the properties currently in existence. And I do think that looking at a rolling yield of about 9% currently, with the interest rate that actually just dropped down, a company that's trading at 70% its NAV, 31% discount to its NAV. And again, let's exclude that early 2000s where they actually managed to run way over one times book value. Let's just take an average one-time book value, which we've been able to do around about the 2015s. I think there's quite a bit of upside, plus a very, very attractive yield in Growthpoint. Just get your entry right, but I do think it's looking quite attractive.
And they own half of the V&A, and as they say, they're not making more V&A. Yes. Well, actually they are. They're digging out some of Granger Bay, but I think folks get the point on that. Alex, you're going with Sun International.
Yeah, so Sun International is one of those African companies we alluded to earlier in the show that is just looking incredibly attractive from a valuation perspective, and a little bit of growth can go a long way. So if we look at valuation, you're pretty much paying a dividend, pay a P of about 8, dividend yield of about 10%. We expect decent earnings growth from the business. And the resorts is doing much better of late, but also Sunbet, which is the online gambling business, is growing at exceptional rates, and we think that's going to continue with margin expansion. And I think something that's misunderstood perhaps at Sun International is the incredible cash generation the business has. So even though it's trading at a P of 8, on a cash basis, it's probably by 6 times, if not less. So they can pay massive dividends, repay down debt, do acquisitions, and still give you growth. So for me, I think Sun International is offering you an extraordinary opportunity at the moment here. And of course, if there's tourism increase from specifically India and China coming to our resorts and spending money on casinos, that'll also be a benefit. We know, of course, the visas have changed and so forth. Yeah. So it's a lot of things to look out for. So at the moment, I think there's high margin of safety and one to look at very closely.
Yeah, and I'd forgotten about those visas. That does potentially change a lot. That's all for Stockwatch today. Thanks to our guest, Schalk Louw, PSG Old Oak, Alex Duys, Umthombo Wealth. Up next, The Close. Stay tuned.